When you're looking for a junior mining company to invest in, you want to minimize your risk on the one hand, but maximize your output on the other hand. And finding a small company with a lot of growth potential, but being close to production on the other side, that could be the perfect setup for you as an investor. And today with me is Warwick Grigger. He's the executive chairman of Aguia Resources. And Aguia is actually close to production, not only with one, but with two assets in two countries, two different commodities. And we might be able to see first cash flow in 2024 already. Also, obviously, we do have an experienced management team. Warwick, first of all, thank you very much for your time. It's very great to have you.
Pleasure to be here, Jan.
So, Warwick, you are around for quite a while in these markets, right? You've been in the mining industry for many, many years. And we've seen especially the juniors struggling a little bit over the past, let's say, 3 years. I think we've seen a little bit of a boom in the commodities by 2020, 2021, right? After that, hard times. Where do you see us in the cycle? Are you expecting another boom quite soon? Because the setup doesn't look too bad, right?
I'm not expecting a boom immediately. What we've gone through is an extraordinary 3 or 4 year period in the markets. We had COVID, everyone was sitting at home, punting the stock market. We had a boom like you couldn't imagine. It didn't make sense. There was no fundamentals behind it. But after every party, you have a letdown and a hangover, and we've just been going through that now. It's an extended letdown because we had an extended boom. At the moment, we also had the imposition of social media and terms like critical metals and a lot of hype that really was hype rather than good investment commentary. And I think the market's grown a bit tired of that. The market, the investors, the people in the public want to get performance out of their stocks. They're seeing the shallowness of just chasing money. And I think when we come out of this, we'll be looking at something more solid. It's not about getting rich quick. It's about making the correct investment decisions, backing the right management, and a pathway to earnings. So I think we'll be reverting back to somewhat more of a measured improvement, but I can't see any sex appeal being thrown in it quickly.
Okay, so you think now is the time to position yourself, to do due diligence, and then make smart investments to be positioned for the next, let's say, 2, 3, 4, 5 years when the next run is coming. Is it correct?
Yeah, that's correct. The other point to consider is at the bottom of a bear market, a lot of people have lost a lot of money. They don't have a lot of spare cash. They haven't got what it takes to get the markets moving again. So it's going to be gentle and building on achievement rather than just a hot tip.
All right, that's good to know. And as I already said in the beginning, you've been in the industry for quite a while. I mean, I talk a lot with Australian business people, and in conversations, your name often pops up because everybody seems to know you. You're well connected, and you had many successes in the past. Maybe before we dive deeper into your project and into your background, give us a little bit of an overview about Aguia. What attracts you to the company? Why did you decide to join and to build it the way it is? I mean, there's been a lot happening within the last 1 or 2 years. Tell us a bit more. What makes you so excited?
Well, it's a bit strange. I accepted something that I knew was going to be a major challenge. I knew there was some good assets there. So it was a bit of a risky move for me to go on there. But through adding a gold company with a phosphate company, we had a commodity which was very much in favour with the gold price performing. The phosphate was an underappreciated asset that had a lot of potential, but certainly I had my work cut out for me going in there to turn the company around and refund it. And even at my age, I like a good challenge.
Well, that is, and let's talk a little bit about your background, because I'm always telling that a good management team, a good CEO or executive chairman, this is what a company needs, right? Because sure, you need to have a good jurisdiction, and you have to have good gold amount in the ground, but in the end, you as a person are responsible for my money as an investor. So tell us a little bit more about your background, and also a question: do you have skin in the game in this company? So are you invested yourself? Tell us a bit more about that.
Well, I'm strongly invested in it myself. My career has consisted of being an analyst, raising money, giving advice, but handing the money over to the companies. And then my reputation often depends on how wisely they spend that money. And unfortunately, it's not a perfect 100% success rate with these people spending the money correctly. So management is everything. If you've got good management, but not just management, good leadership as well, goes hand in hand, you can face changing situations. You can face problems as they come along, and you can solve them. That's the very important thing. Nothing ever works out exactly the way you think it's going to, and you have to be able to be flexible and a bit of a lateral thinker. In this case, I do have good skin in the game. I've got about 6% of the company. The CEO's got about 6%. And I think that this is such a good company that I really don't want to hand it over to someone else and watch them mess it up by accidentally or deliberately. So I've actually taken on the role of executive chairman with all my 40 years plus of experience. I want to make sure that this gets the best attention, the discipline, and you can only do that if you're up front and center. So very much taking responsibility for what happens myself, and but I've got confidence that with the team I've got, we can do it. Basically, I did clean out the management of both Andean and Aguia, and we're rebuilding it with the sort of people with a cost base which we think is better equipped to succeed.
Great. So I'm always telling the people to a little bit check the boxes, if you like, right? So we do have an experienced management team. You do have skin in the game. You have the contacts also to raise money. We can talk about your latest news here in a minute. So we can put a checkbox definitely behind the management and skin in the game, because you're definitely committed and invested into the company. So let's talk a little bit more about the projects. We do have a gold and a phosphate project. The gold project is a little bit, let's say, more advanced, because it's could be in production by this year, the phosphate maybe next year. So let's start with your Santa Barbara gold project, which is located in Colombia. You're close to cash flow. This is great. Tell us a little bit more about that.
Well, there's already a 30 tonne per day pilot plant on site. We will turn that on. It's last operated about 18 months ago, but they kept it in good order on care and maintenance. So within about 2 months, we expect to be turning that plant on and starting to produce gold. Now, the beautiful thing is the very high grade. The ore body itself, if you do the channel samplings, you'll come up with grades of 30 grams plus. In the trial mining phase, about 18 months ago, they treated 500 tonnes of ore, and they recovered 20 grams per tonne. Now, that is important to say that at the same time, we do not have JORC resources. We haven't drilled the ore bodies. Instead, we've developed on the ore bodies and actually produced the gold. The amount of information you get from a 200-metre adit, stoping the ore zones and putting it through a CIL plant, that's immeasurably more information than you get from 50 or 100 drill holes. We have all the answers we need to the question, but can you mine it? Can you process it? We can. We know that. Now, we're going to go back and we're going to start drilling from branching out from the ore body as we see it, above and below, and we'll quickly come up with inferred and indicated JORC resources and maybe even reserves, because that database and confidence of seeing that ore body is tremendously valuable. So we've de-risked all the production aspects. There is exploration risk, but we've got 7 kilometres of veins that have been mapped and sampled, and we're very confident that we will get a substantially larger resource in due course when we drill it. We will be continually reinvesting in the mine, expanding it, developing further, doing drilling. We have a rough intention to be twice the capacity in 2 years' time. But the beautiful thing about this project is we don't have to keep going back to the market to raise money. It'll be self-funding. The amount of money we need to get it up and running is about $3 million. We will recover that within 2 months of operations, and then a very strong cash flow to fund all other aspects of the mine. That works perfectly in sequentializing the development of the phosphate. The cash flow from the gold should be coming out strongly in Q1. We only need in the order of $5 million to get the phosphate going. So if you're happy for me to move on to that.
Yeah, I was about to say that sounds a little bit like you can make cash out of the gold, not at a large scale, but at a scale which is definitely not to underestimate. And then you can move the cash to the phosphate. So tell us a little bit more. But maybe you can just, for the people that are not so familiar with phosphate, because gold is probably more familiar for most of them, tell us firstly, what do you need phosphate for? Why is it a good commodity? And then tell us more about the project, yes?
Well, food security is a growing theme as our population grows. In particular, we saw with the Ukraine war a lot of disruptions to fertilizer supplies. Phosphate is one of the 2 key fertilizers that you use. Potash is another. Phosphate, basically you use it on crops. What we've got is a rock phosphate. The grade's about 7 to 10% P2O5, which is different to superphosphate, which is 30% plus. But the phosphate, one phosphate deposit can be very different in economics to another. If you look at phosphate projects in Northern Australia, we've had a few over the years, the trouble is you have to mine it, you've got to get the grade up so they can bear the logistics costs, the transporting of thousands of kilometres on trains, trucks and ships. And that basically goes to Asian countries. What we've got in Brazil, the southern state of Brazil, Rio do Sul, we're surrounded by a very extensive farming community. All of our product will be saleable within 300 kilometres trucking distance to the plant. So the logistics are simple. We would only get about $140 a tonne for our product, not the $400 a tonne that superphosphate costs. But that's to the benefit of our customers. They'll get very good performance of our product without superphosphate costs, without the nitrogen that comes with it, and all the transport and logistics to get it all the way from Morocco. There's a great market in Brazil for import replacements. So that's what we'll be doing. The logistics are everything. We can produce phosphate and our costs will be around about $50 a tonne Australian. We will be able to sell it for $140 a tonne, plus or minus $10. Great profit margin. The other thing about the phosphate is there's no exploration risk. We've got JORC resources sufficient for at least 20 or 30 years of production. It's a very simple process. To start with, we're only going to concentrate on the soft saprolite ore, which is, it's free dig, no drill and blast, waste to ore ratio of only 0.5 to 1. We will mine initially about 10% P2O5. We then truck it to a mill, reduce it in size to sub 2 millimetres, bag it and sell it to the farmers. No chemicals, no fancy metallurgical process. You screen it initially, put it through a dry, because we have to reduce the moisture content from 18% to 8%. A little bit will go through hammer mills, the harder bits that hadn't already broken down, and then we bag it. So you couldn't imagine something simpler.
That sounds very good, very simple, and I think the story overall is very understandable. But Warwick, let's talk a little bit about the potential here, right? Because I think it's important for investors to understand this. We are here talking, and correct me if I'm wrong, please. We are talking about a smaller scale production with the gold, also with the phosphate. Is it all to the dividends that you could pay later on? Do you expect further growth, especially in the gold sector, to grow the market cap as well here? Give us a little bit of perspective.
Well, just to finish on that phosphate, the big improvement in a bit of lateral thinking, rather than construct a brand new plant which would cost 25 or 30 million, we've identified an existing plant that's run out of oil. We need to do a few $1 million worth of modifications, but all up, instead of spending 25 million plus, we're going to spend 5 million on capex. Now, for the phosphate, we've got expansion potential. With an industrial minerals product, you don't turn it on and sell it all straight away on day one like you could for gold. It'll be a ramp-up period of a year, and as we get market penetration, we will expand because we've got lots of resources. We could easily be doing 500,000 tonnes per annum 3 years down the track. That would be generating at least $50 million a year free cash flow. The gold will progressively expand, but the big picture is just what the geology holds, what the drilling will disclose. There is a mine called Buritica, 100 kilometres from us in Colombia. 10 years ago, they were where we are today, a 30-tonne per day pilot plant and no reserves. They started generating cash flow, they started drilling, and they went from no reserves to 2 million ounces to 5 million ounces and eventually 7 million ounces. And they were just developing a 250,000 per annum gold mine when Zijin Mining came along and paid 1.4 billion for a 65% ownership of the mine. Now, that's wonderful. That's what we would like to achieve. It'll take a number of years of drilling, but we've got the same sort of geological system. It's not impossible that we will have millions of ounces, whether it's 2, 4, 5, I don't know. But it's a wonderful exploration opportunity, and at the same time, we're generating the cash that we need to do the drilling. So on the gold alone, I don't see why we couldn't make at least a 10-bagger from these current levels. And that's every investor's dream. So it's a growth stock. It's not something that is going to go from 3 cents to 10 cents overnight. But if you look at the share price, people are starting to understand and appreciate what we're doing, and it's a very healthy share price.
All right, so all of this sounds really great. So we do have the upside potential in the share price. We also have the potential as an investor to get dividends paid out. So there's a lot of ways to earn money out of this if you are successful, obviously. For the end, we talked a lot about the projects, and I think all of this sounds great. We talked about the upside potential. Maybe for the end, you can tell us a little bit about the downside potential. I mean, the share price has picked up a little bit since December, I think, last year. But if we have a look at the share price, we're still on the big picture, not that high. Junior industry in general, right? So how far can you go down if we would talk about that?
I don't think there's much downside risk at all here. We've got all the licenses we need in both countries. We're not going to suffer the regulatory problems. None of the operations have a big footprint. If you're trying to develop a really big open pit with big tailings, it's hard to get a social license, it's hard to get approvals. But we're basically flying under the radar with a small footprint, high profit margin, small mine. If you want me to try and invent problems, well, there could be issues in interruptions. There could be equipment failure. I don't. There's nothing that I can see coming along that we can't handle as managers and adapt to it. Dealing in a country like Brazil, it's Portuguese style bureaucracy is always a dampener on things. You need approvals, but basically we've got all those. Perhaps the phosphate price could fall, gold price could fall. We certainly won't have the issues of big debt. Any debt that we have will just be working capital debt, no secured debt. This is actually one of the best things I've ever seen. So, some people, when you talk Colombia, people either think Pablo Escobar or what a wonderful place it is. I think that risk, we don't have coarse or nuggety gold that can be stolen. It's all going to be invisible gold and captured in dorés. Obviously, getting a helicopter to fly in and take that gold out is a smart way to go. Could there be security issues? Well, maybe, but we're engaging the top experts to make sure that we're prepared for anything that might happen. But wherever you are in the world, geopolitical risk. When I was with Canaccord, we made a lot of money out of West Africa. I wouldn't go to most of these places in West Africa today because the jihadists are moving in. I was there at the right time. I don't see South America or Brazil having any of those sort of issues they have in Africa. You've got good education. Colombia's been growing well. I think that it's a pretty modern country. Always government in these countries is not as tight as we'd like it, but we're finding that all around the world with Western countries being governed by minority governments. That results in weak, indecisive government, but that's the way we're going. I don't see Colombia as being anything extraordinary at the other end of the scale.
Great. All right, Warwick, thank you very much for summarizing this really simple story for us. Early cash flow in gold, bring up the production in the phosphate industry. You can also reduce your capex, as you already said, with your phosphate. So all of this sounds really good. So Warwick, let's for the end just talk about the upcoming news flow. I mean, just last week you have released news that you got $2.5 million in a placement. What are you going to do with the money? What can people expect in the future?
That money will go towards recommissioning the gold treatment plant. That's our priority. We don't tend to spend much on the phosphate. We'll just keep the wheels turning. The most important thing for us is to produce gold to get cash flow, and everything flows from that. But the $2.5 million will take us through to a cash flow positive position on the gold.
That sounds good, very good, and I'm looking forward to the first gold bar which is produced in your Santa Barbara project. Thank you very much for your time. Thank you for your great insights. It was a pleasure talking to you.
Thank you, Jan. It's been a pleasure from my end too.